So every week we get together, we do a new market update, and I'm going to do the roll-up of all of Texas, and I'm going to break down the major markets while we're here together. So last month in Texas, our average sales price was $406,000, so it was up 8% versus where it was the same time last year. The closed sales were down 22% for all of Texas. Our active listings have come close to doubling throughout Texas. So we were at 55,000 this time last year. Right now we're at over 92,000. And it used to be that our list price as a percentage of our closed price was over 100%. But this last month we were at 95.3%. So what that means is if it was listed for 100, it sold for 95,300, right? Let's see, for Austin last month, the average price was $599,000, up 6.5% versus where we were the same time last year. Our closed sales in Austin were down 29%. Last year we had a 1-month supply of inventory. Right now we have a 3.2-month supply of inventory. But as I mentioned earlier, when the market is going down, that month supply of inventory number looks better, meaning looks lower than what it actually is. Pending sales down from 3,700 last year to just over 2,100 this year. Our total active listings have almost tripled over the course of the last year. And our closed price to our original list price is 93%. The same time last year, that number was closer to about 106%, meaning again, if last year, if it was listed for 100, it sold for 106. This year, if it was listed for 100, it sold for 93. So we are seeing some impacts of the increase in interest rates. For the San Antonio market, the average price was up to $382,500, 8% higher than what it was the same time last year. Total sales down 19%. Months of inventory in San Antonio from 1.7 month supply to a 3.2 month supply. Pending sales from 3,200 to almost 2,200. Active listings almost doubling as well. In the San Antonio market, last month the leases were up about 6% year over year. The lease price this month was up 6%, but leases were flat year over year. In other markets, for example, the Dallas-Fort Worth market, leases were up 20% year over year, and the lease price in the Dallas-Fort Worth market up 6% year over year. In Dallas-Fort Worth, the average price was $484,000, up 12%. So this is something that confuses a lot of people. You guys have heard me say over and over again, our sales are down somewhere between 20 and 30%, but you've also heard me say over and over again that our average price is up. How can that be? How is that? Does that make any sense? Who can explain that? Someone says that fewer houses being sold at a higher price. That's a good point. So really it's still that we are in a lack of supply, okay? So right now, for example, last year, Dallas-Fort Worth had a 1.3 month supply. Right now there's a 2.5 month supply. Even though I think that number is lower than it is higher than what I have reported here, just because of the fact that we're seeing sales drop so significantly, it's still lower than our 40-year average in terms of months of inventory. Our 40-year average is about 6 months of inventory. So we're still at a supply deficit, right? And it's just the basic laws of economics, supply and demand. When you we have demand, it's not as high as it was the same time last year, but we still don't have the amount of supply needed. So that's why we're still having some sellers still holding out for us, right? Because again, they're back in the time machine 6 months as well. But our supply is still really low. And our demand is, even though it's gone down significantly, there's still enough demand there that the sellers still have a little bit of control versus where we were the same time last year. Now, if I were to give you the number for the average sales price in May, for example, for Austin, I want to say it was close to $650,000. And if I go back, give me 1 second to go back, and I'll put up the Austin number again, just so you guys can see that. All right, so here we go. So for Austin last month, the average sales price $599,000. If you were to go back to, for example, May, I think that number was closer to $650,000. So the price is down versus May, but the way that we look at it and compare because of the distribution curve in real estate is we go back a full year when we're looking. So it has not significantly affected the average price. It has significantly, we have seen a significant reduction in terms of the total number of sales though. Pending sales in Dallas down 28%, active listings up 97%. So those numbers, we're seeing those across the board. In Houston, the average sales price was up 7% to $404,000. Closed sales were down 22.8%. Months of inventory from a 1.8 month supply of inventory to a 2.8 month supply of inventory. Pending sales down 23.4%. Total active listings up 43%. Lease listings in Houston are up 19%. The lease price is up 4%. And the new lease listings up 39%. What does that tell you? Someone said new builds. What else? Sellers who have said, oh, I can't sell my house anymore for what I want to sell it for, which was the number that it was in May, right? So now I'm just going to hold on tight because I've got options, and I'm just going to lease it. Okay, so that's where we're seeing an increase in the number of leases there. I don't have those numbers for all the markets, but Houston does report on that statistic. So, all right.